Welcome to the Three Questions podcast, where we dive deep into the world of wealth management and connect you with industry experts. I'm your host, Wayne Baxter, Senior Executive Manager at One Capital Management. Are you or someone close to you a U.S. Canadian dual citizen or a resident alien with questions about how your Canada pension plan, old age security, and Social Security benefits will be taxed? If so, you're not going to want to miss today's episode. We're going to address the three questions cross-border investors should ask about taxation of retirement plans and Social Security. Thank you for taking time to check us out. And if you enjoyed this episode of Three Questions, please consider liking this video and subscribing to our podcast and YouTube channels. On our second of a three-part tax planning series, Marc Gedeon joins us. He is the founder and principal of Gedeon Law and CPA. Marc and his team specialize in cross-border taxation matters, and he has an emphasis on tax preparation and planning for clients who work, invest, and conduct business in the United States and Canada. Marc, welcome back to the Three Questions podcast. Great to have you back again.
Thanks for having me.
Appreciate it very much. You know, I'm sure my audience today is going to be very excited and interested to learn more about cross-border tax planning from Marc. We're going to address the three questions cross-border investors should ask about taxation on retirement plans and Social Security. Now, we'll keep it brief, just a quick overview here just to get everybody up to speed. Social Security in the United States is funded through payroll taxes. So the employees and the employer each pay a portion of those taxes, and the eligibility for these benefits are based on something called work credits that are earned throughout your career, your working career. So typically you need 40 credits to qualify for retirement benefits, which can be earned by working and paying Social Security taxes for at least 10 years. So that's in the U.S. Now, on the Canadian side with the Canada Pension Plan, otherwise known as the CPP, and it's based on how much and how long you've contributed, as well as the age you start receiving your pension. Now, with the old age security benefit, there is no income, there's no paying into that plan. You don't have to, it's not related on that. It's basically a monthly payment, and it's based on the length of time that you lived in Canada after the age of 18. Now, here's the thing that most people who get the rude awakening with OAS is that there's a recovery tax, affectionately known as the clawback, if your annual income exceeds a certain threshold. So that's just sort of a high-level overview for those who are, maybe not familiar with both Canadian and U.S. pension law rules. Now, for U.S. and Canadian dual citizens or resident aliens expecting to collect Canadian pension plan, the CPP, the OAS, and Social Security, there are some important tax-related factors to consider. So our topic today is the three questions cross-border investors should ask about taxation of retirement plans and Social Security. So Marc, let's get right into it. Question number one, how do I report income earned in one country, and this is from pension plans, while I reside in the other country? So for example, you're living in the United States and you're also getting Canada pension plan and old age security. We'll use that as the first example.
Right. So this is it requires a combination of things to go right in order for the tax side to work out the way it should. The first thing, when it comes to taxing retirement income, is we need to know what country you're a resident of. Are you a resident of Canada, non-resident of Canada, resident of the U.S., or are you a U.S. citizen living in Canada, green card holder, etc.? That is the most important question, because you can't really properly assess how retirement benefits are going to be taxed unless you figure out where you reside. So once that's done, okay, the next step in the process is really working with the governments, the Service Canada, Social Security in the U.S., pension companies in Canada and the U.S., 401ks, RSPs, all sorts of stuff, to properly configure your residency status for purposes of how their tax is being dealt with. I say that because if, for example, you are a Canadian, but you live in America and you're a citizen and you still may be collecting distributions from your RSP, or you're going to be collecting CPP. In a situation like that, there is no Canadian tax that needs to be reported, like in terms of filing a tax return. Because if everything's done correctly, there should be no tax withholdings on your CPP or old age security, okay, by the Canadian government. And for example, for distributions from the RSP, there would be a withholding done by the custodian.
With a custodian, right?
Yeah, at the time you receive the distribution. And that's your final tax to the Canadian government, which means you don't need to file a return in Canada, and you just have to, report all this on the U.S. side. So the, upfront maneuvers that you make when it comes to your retirement income is the key, and will determine pretty much how everything flows from there. I hope that answered the question.
Perfect. No, that's exactly right. So, and just on the other side of the coin though, so let's say you had lived in the US for many years and now you've moved back to Canada, right? And you're now retired and you're getting your Canada pension plan, your old age security, but you're also getting Social Security. So does the reverse apply as well?
Yeah, so let me break it down this way. Generally, the country that's paying you Social Security benefits shouldn't be taxing you or withholding any tax on those benefits under the treaty if you are a resident of say Canada. So if I live in if I live in Canada and I'm receiving U.S. Social Security, well, under the treaty, the U.S. isn't subjecting me to tax on that Social Security income, even on my, say I'm a U.S. citizen, even on my U.S. tax return, on my 1040, I don't have to report that as income, because under the treaty, it's only taxable in Canada.
In the home country.
Yeah, the same home country. Same goes with CPP and old age security. So it would be taxed if you live in America, it's going to be taxed in America, not
By
in
the
Canada.
IRS.
Mhm.
All right, perfect. Thanks. So question number 2. Can I claim foreign tax credits or deduction in one country for taxes paid in the other country? And if so, how do these credits or deductions work?
Right. So this is going back to what we we're just discussing. For example, under the treaty, okay, you don't have to worry about a foreign tax credit for your U.S. Social Security income on the U.S. side, because you're not paying any tax on it anyways. All right. So that's, this is where you have to be, aware of how the treaty works and who taxes what. So in a situation like that, there's going to be really no foreign tax credits going across. Different story now, for example, let's say it's an RSP withdrawal. Yeah, you'll pay your Canadian withholding tax at source, but on the US side, you'll get to take a tax credit for the taxes you've paid to the Canadian government. That's when or if you're receiving a regular company pension, for example, same thing applies there. You'll get a tax credit for the withholding tax that the company, and it could be you worked for GM or you worked for Ontario Teachers Pension. The withholding that they take from your distributions will be considered your tax credit for U.S. tax purposes.
And you'll get a consideration for that in reporting to the IRS.
Correct.
Perfect. Okay, we're moving right along here. Question number 3. How does the tax treaty between the United States and Canada affect my tax liability and obligations with respect to my Canada pension plan and OAS and Social Security benefits?
Yeah, well, the good thing about that is that your benefits are taxed the same way they would be taxes if you live in the country that is paying you the benefits. So take, for example, Social Security. If I'm collecting Social Security and I lived in America, it's subject to a certain tax treatment. Well, the good news is on the Canadian side, because of the treaty, the same treatment that would apply to that income on the U.S. side is going to be applied on the Canadian side. So this is where you want to work with somebody to make sure that how you're reporting this income on your tax returns is done correctly. Because you make a mistake and you're not reporting it in the right place or the right way, or you're not taking treaty exemptions, etc. All of a sudden now you may be paying tax on income you shouldn't be paying tax on, or you're paying more tax than you should be paying. So this is where, it definitely pays to work with somebody that knows how to handle these
I,
sources
I,
of income.
I do want to bring up one thing before we wrap up here, and that is regarding something we call the WEP, or windfall elimination provision. It's not really, I don't know if they refer to it as a tax, but it's related to the fact that, basically it's understood between, the IRS and the CRAs that you can't double dip on your government pension. So the way it essentially work at the very highest level, if you are entitled to pensions in both countries, the U.S. will reduce the Social Security by, and it's a very complex formula that, internally here that we work with our clients to estimate at best, I think we would call it. And it basically is related to the amount of your reduction or clawback of your Social Security is in direct proportion to how long or how short you have worked in the U.S. So I think the threshold's like around 30 years. So if you've worked in the U.S. for 30 years, there's very little clawback to the Social Security. Whereas if you've only worked in the U.S. for, say, I'll just make 10 years, that it'll be a higher percentage. And it's not a dollar for dollar calculation. So it isn't like, your Social Security is not reduced by $1 versus what you get in for CPPOS. So it's a calculation that's very involved. And, we do capital forecasting for our clients. We also, do our best to give our clients a decent estimate of how their Social Security will be impacted. So taxation, not so much, but it is something to consider when you're thinking about your Canadian or your Social Security benefits as a Canadian living who have earned CPP and OAS benefits. So Marc, you know what? We've covered a lot of ground again on this podcast. I really appreciate you joining us, and just, there's so many, questions that I know we probably have conjured up in other people's minds. Best way to reach you, email, website, phone number, what would you recommend?
All three.
Perfect. So I will, so the email address for Marc is info@GedeonLawCPA.com. The website is www.GedeonLawCPA.com. And Marc, if you could share the phone number.
Yes, it's 888-473-7967.
Perfect. Marc, thanks again for joining us today. My special guest today has been Marc Gedeon. He is the founder and principal at Gedeon Law and CPA. Thank you very much, Marc.
Thank you.
I look forward to bringing you the 3 Questions podcast, and I hope you find them educational and informative. Please consider liking this video and subscribing to our podcast and YouTube channels. And to receive notification as to when our latest podcast has been posted, please click on the notifications bell. Lastly, to schedule an online Zoom consultation with me to discuss your wealth management needs, please click on the link in the description box below, www.onecapital.com/meet with Wayne. Thank you, and we'll see you soon.